Okay, so the job in hand is to get returns that beat inflation. And inflation is not 5 or 6%, it's 10 to 12%. You know that. So government backed securities are giving 6.5 and 7% return, and you want 100% premium over it, a 12-14% return on your investments. You must be crazy, right? Or you must be very smart, which I think you are because you're watching this video. Which investment can give you a 6% more than risk-free return? Which asset has that kind of potency? When I say potency, I mean the ability to grow and multiply. Potent versus important. You get it, right? Which asset has that kind of, which magical asset has that kind of potency that can do this in a long and sustained basis? Is it real estate, a piece of land or a commercial property, or is it gold? Could fixed deposits do that? Maybe chit funds, maybe private lending, or maybe cryptocurrencies? Which asset can do that kind of magic as to give you 100% premium over risk-free returns? Let me tell you, there is only this asset that I know of that exists that can have that kind of potency to give you consistently 100% over risk-free return. You know what it is? Human intelligence. The ability of a human mind to think up solutions for problems and make money selling those solutions, mustering up resources to get people buy into those ideas, getting big visions out, scaling up the business, making profits, and sharing the profits with the co-owners, and doing this over and over and over again. That is what I called a potent asset. We hear stories of companies that started in garages and now own whole cities themselves, right? What made that happen? The intelligence or the ability of the man at the helm of affairs, right? Investing in good quality businesses is the most promising of all investments. Don't you think so? Think of it this way. You want to be beating inflation with your investments. Now, when we say inflation, we mean rise in prices. Let me take an example of the cost of a toothpaste was 10 rupees and now has become 2 rupees. So 2 rupees is increase in price. What happens to this 2 rupees? Who gets this 2 rupees? So the 2 rupees goes back to the company that manufactured and sold the product. And even assume his expenses also increased, and that was 1.5 rupees, and 50 pice per toothpaste is the profit that he made. Who gets to share this profit? The shareholders of the company, right? Which is the owners of the company, right? So what inflation takes away from one pocket, equity can put back into the other pocket. So what I am recommending here is investing in good quality companies as shareholders to become co-owners, not as a lender, not for regular interest income, no. To partake in the growth story of good businesses is good investment. What I am simply saying is become an equity investor or invest in stock markets. I know some of you want to run away 100 kilometers now that I've spoken about stock markets. The word stock markets has that effect on people. But stock market investing does not have to be as difficult as you think it is. You don't have to pore over balance sheets to understand it. You don't have to get mild heart attacks when prices go up and down. You can do simple, easy stock market investing, enjoy the kind of returns that it gives without having to go through the trouble of stock market investing. Watch my next video to know how you can invest in stock markets, make profits, build wealth without having to go through the trouble.